Joining me now is Strategy Risks CEO Isaac Stonefish and Blueshirt Group Managing Director Gary Dvorchak. Isaac's firm specializes in China risk assessment, while Gary leads Blueshirt's Asia practice, supporting U.S.-listed companies from the region. Gentlemen, it's great to have you on for what I suspect is going to be a very robust discussion here. So, Gary, I'm going to start with you because, yes, we had CEOs in China meeting with Xi and other officials this week. But we also know we have all of this trade policy and tariff talk swirling in the background as we look to April 2nd next week. And we've seen other things, other duties implemented in the meantime. So what does this mean for U.S.-China relations and the companies caught in the middle?
Well, Morgan, thanks for having me on. The meeting today, I wanted to take a few seconds and put it into some context, and that is that the Chinese government has very few options now to stimulate the economy. China's in a depression. There's absolutely no doubt about that. And they're also in a pretty nasty bout of deflation right now. So everyone knows real estate values are down, but everyone is getting pay cuts across the board. I live there, right? So I talk to business owners, talk to people. Everyone's salary is being cut. Businesses, their volumes are down. So everyone is really struggling just to make ends meet and to keep going. And so the standard playbook for the Chinese for economic recovery or growth is exports, right? And that would have been tough under any circumstance. But now with the tariffs looming, that exporting your way back to growth and a more robust economy is going to be very difficult to impossible. So they need internal consumption to pick up the slack. And how do you get that when nobody has any money? Prices need to go down just to create some stimulus. And so I think the Chinese government rightly is looking at every single option. We saw Xi Jinping met with Jack Ma a couple of weeks ago. He's trying to show the love to the domestic tech industry, which hasn't been feeling it as much the last few years. And they really need the tech industry to revive. And you need external investment, right? So you need these companies to up their game in China and make more of a commitment because they don't have a lot of other choices.
Yeah, the meeting with Jack Ma was particularly notable to me a couple of weeks ago. Very symbolic, given the dynamics with Jack Ma in recent years and the fact that he sort of fell out of the public eye. Isaac, how are you advising clients and companies right now, given all of these dynamics swirling in the background?
Companies are trying to stay out of the spotlight. They don't want to have a target on their back from Trump or from Chinese Chairman Xi Jinping. And so usually that means making sure what you're doing in China isn't going to raise eyebrows from what Trump wants, but also Secretary of State Marco Rubio, National Security Advisor Waltz, the issues that they might have with certain American companies and global companies' performance in China. For President Trump himself, it's a lot more on, I want to make sure companies are investing in America. I want to see those big top-line numbers. Companies are understanding that, and so they're spending money or claiming that they will be spending money in the States. We saw that with Apple. We saw that with TSMC. I'll just add, I was very surprised that Apple made its $4 million donation to Zhejiang University, like basically every university in China that is a school that is owned, operated, and overseen by the Communist Party, and that got very little attention in the debate. But it seems like those types of partnerships with the Communist Party are still today seen as normal.